Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about decentralized finance, or DeFi, and yield farming. Obviously, there's a lot of interest in this space over the last several years as people want to earn interest on their crypto and do it in a decentralized manner where you're not necessarily having to trust a third party. However, there are risks associated with DeFi in and of itself as well, and that is where the RugDoc comes in. So the Rug Doctor is a channel that I've been following for a little while, and what they do is they provide some insight into the risk of staking or maybe earning interest on your crypto on various platforms. So what I want to do is we're inviting the Rug Doc on, and we're just going to let her take the floor for a while, sort of show us how she navigates this world and how you can do so where you manage your risk. So it's a pleasure to have you here, and I will let you take it away.
Oh, awesome. Thanks. No, it's really great to be here too. And I mean, obviously, I've been following you for a long time as well. You've been here far longer than I have. So, yeah, it's great to finally be able to chat and meet up with you. So, I know you guys had that really good video a few weeks ago with Taiki Maeda about just like introduction to yield farming and DeFi. And I feel like that covered most of the introductory material. But for people who haven't seen that, I can just briefly go over what is yield farming. And kind of like you mentioned in the intro, it's a way that you can maximize profit off of your existing cryptocurrency. And the way you do that is you invest in cryptocurrency or tokens via these decentralized apps, which we call dApps, and you stake them and you can earn interest on them by staking them. The way a lot of this works is you essentially stake these tokens into liquidity pools. A liquidity pool is a smart contract that holds on to and it locks these cryptocurrencies or these tokens that you've put in. They basically contribute to the liquidity of a trading pair pool. So, for example, you could use Cake, which is PancakeSwap's native token, and BNB, which is the Binance Network's native token. And you can do that by putting these two together into a liquidity pair that you own and depositing this crypto, the Cake and the BNB, into a pool on the dApp. So, for example, PancakeSwap, but it could be literally anyone. And you receive liquidity pool tokens in return.
All right.
Yeah. So, like you said, there's a ton of risks in decentralized lending. The brilliance of it is that it's decentralized, right? It's immediate, it's fast, it's just direct lending, it's direct earning interest instead of having to go through a bank and put your money there and hope that you get like 0.5% of interest. You can directly stake into these different dApps and you usually earn a hell of a lot more than 0.5% interest.
Yeah.
I actually don't think I've ever seen anything that low
Yeah,
in
as we
DeFi.
say, who gets out of bed for 0.5% these days?
Yeah, absolutely nobody, right? But the way you earn these big APR is by taking on a reasonable amount of risk. Basically, the biggest risk to your funds, to your liquidity pool tokens, are rugs. And a rug is just a name for a rug pull. It basically means like you enter into something and then all of a sudden the rug is pulled out from under you and you just wind up with your tokens lost and you've lost that money forever. And because it's decentralized and because it's crypto, there's no regulatory, there's no insurance. You lose those funds and they're just gone forever. The way that you can deal with these rugs, and there's two types of rugs. There's hard rugs and there's soft rugs. Hard rugs are like straight theft. It's when inside of a smart contract, there's malicious code written into it because all of these contracts are written in a programming language called Solidity. And basically in the smart contract, there's going to be a code that can just eat all of your funds and just drain them into somebody's wallet. But there's also these softer rugs, which are more human factors. And it's like if a dev for a dApp has a huge pile of their own native tokens and they just cash them all out, the native price goes to essentially zero and the APRs crash as well.
Yeah, I've seen that. I've seen that a lot, and I know that That's what keeps a lot of people from venturing into the DeFi world. I know a lot of people they'll earn interest on centralized platforms, but they're scared about DeFi because you have new platforms popping up every day that promise the world, and then you'll see people that lose everything. And so yeah, like how do people navigate that?
Sure. So there's several ways that people can tackle this, and some of it is just by mitigating your risk. There's different ways to mitigate risk. One of that is to either look for reviews or audits of the code, keeping in mind that reviews and audits are not all created equal, right? There are tons of influencers out there who are more than happy to just like take some money to provide some like BS shill review for, this newest farm, and the farm is really a scam, and they've just like sent $100 to some random person on YouTube and to say that their platform is the best ever, and some poor people just go into it, and then the next thing you know, all their money's gone.
I like you already, because this is the main issue that I see is how do you trust things when so many people just get paid to promote that, like they're just paid to promote it, right? So it's like, how do you yeah, it's like it's so challenging to know whose words are paid for and whose words are not paid for.
Oh, 100%. And that's the biggest thing, because everybody's anonymous in DeFi, especially, usually in crypto, but like absolutely in DeFi, everything's anonymous. I just assume that everything and everyone is out to get me. And I just assume and make a strategy based off of everything is a scam. Everyone is lying to me. I need to literally do my own research. And that's how I started RugDoc. At RugDoc, I basically provide free reviews for every single platform that my community requests. It's a peer-reviewed, community-driven, crowdsourced project. So essentially the way it works is people request a review, generally on my Telegram channel. A bot scoops it up, and then I have a team of scanners and myself who go through the codes, and we literally look for like encoded scams. We also look now for like some softer elements of tokenomics, like, oh, we see that like the dev has a huge bag, this is a risk, or, the token contract is designed in such a way that it has exceptional risks to it. I basically started doing this because my husband and I, we both got like rugged epically when we jumped into DeFi. And next thing you know, we were like out of money and super upset. So, I took my PhD in engineering background and taught myself Solidity. And yeah, that's basically how we got started over here.
Right.
Yeah. So the way that you can really mitigate risk is I'm going to like show myself a little bit, is you can look for some best practices from us, because we are this community peer-reviewed project. And we honestly do try to provide a neutral, code-based, objective review. Like I mentioned, I have a PhD in engineering. I know you have a PhD in a similar field. Science rules my life.
Right.
And I really, truly want to look for objective factors when I'm looking for my own investment strategies. I did this for myself and for my little family, and then next thing you know, I'm now doing this for a community of tens of thousands of people.
So to be clear, if someone wants to jump into this world and they are curious about like a platform, okay, they can. First of all, there's a chance you've already reviewed it, and if you have already reviewed it, correct me if I'm wrong, but it's your review of it is completely free to the public. Is that right?
Yep, 100% free. I never charge for these reviews. So there's a difference between a review and an audit. My reviews are going to be these really quick bulk volume parsing through of the code to look for factors. Now, again, I have a team of people who do this now that we've grown substantially.
Right.
But it's still, we're not spending hours on a project. We're spending minutes so we can give you guys fast, quick investment advice, like in the moment, because DeFi moves so quickly. An audit is going to be more code centered. It's going to be really checking for functionality of the code. It doesn't necessarily give user risk to it, though. So my reviews are focused with a user in mind, whereas most audits, but not all audits, are going to be focused on the client who's paying for the audit, which is going to be the dApp, the farm.
Right.
And it's going to be really checking for the functionality of the code. So they could completely have code that could steal user funds in it, but so long as that code works perfectly, they're going to pass an audit and be fine. So I just provide these free bulk reviews for anybody to request in the community that are, hopefully ethical and independent and checked by everybody. We teach people how to check their own contracts. We keep a comprehensive library of different types of scam and exploit codes, so you can check it for yourself. And essentially, we're just trying to always be a free resource for the DeFi community, because I personally believe that if DeFi is a little more approachable, if it's a little bit safer, and if people aren't just getting scammed left and right, it's a really good way to expand, your crypto holdings. It's a wonderful tool if it's used correctly and if it's not just going to scam you.
Right. Yeah. Like sometimes it's easy to look at some of the yield farms that are promising insane returns, but I wonder. And I use some of them, to be clear. Like I use some of them, the ones that have been around for a while and, kind of have been standing the test of time and have been audited and people, they've got tons of users. I'm a lot more skeptical on the ones that, the ones that pop up every single day. And I know there's a whole world of that out there of yield farming, all the new farms, and like yield farming whatever the native token is of the platform for as long as they'll run that crazy, insane high interest rate promotion. And that is sort of where I feel like you probably come in and you actually look at all these platforms and try to figure out, okay, which ones have returns, but then like, are those returns worth the risk that you're taking based on, what you think of it or what your audit of the code, what your audit of the code is, I guess. Something I guess I'm interested in since you've been doing this, like how often do you find that, or can you tell how, is it always, if the code is blatantly trying to scam user funds, is it always malicious, or is there any way to tell if someone just like is purposely trying to do a legit yield farming platform, and then they just happen to put out code that someone else could exploit rather than the actual person who's creating the farm itself?
Sure. I mean, there's a range of all sorts of crazy scams that I've seen out there. But I approach yield farming with heavy skepticism in my own investments, but overall with probably a more, a positive sense about it. Mm-hmm. Since I've been in crypto for years now, and now I have a way to earn massive amounts of interest on just like coins that I've held, like, my Bitcoin or whatever, or my Ethereum. But like you said, and like I've said, it comes with just like huge amounts of risks. And there's all sorts of scams. There are obvious scams, like there's clearly encoded malicious rug code. And this is just like a team. Maybe they're just like organized crime in some other country. And they're just like making these farms and stealing money and making these farms and stealing money and doing it for, on repeat. There's also, just like I said, these softer elements where maybe they just like crash the token and walk away. Or they just like never even launch a farm. They open up a pre-sale and then they just never launch a farm. Or there are ways that they have inadvertently added some sort of a code that maybe they have no reason or intention to exploit or scam, but a clever hacker, or more likely a team of hackers who does know how to exploit a particular function in their code, literally goes around to these yield farms and tries to figure out how they can exploit new projects that have this functionality that they're familiar with, and just eat the funds that way. My reviews do check for a lot of this. And again, I have a very, very good team at this point. Like, honestly, the people who work with me are absolutely phenomenally intelligent coders and programmers. But, things that we know are outside of our scope, we always suggest get a proper user-focused audit as well as an audit for functionality. There are ways, though, to actually make money on yield farming. So for me, once you do understand the risks of some of these new farms, maybe they don't necessarily have a lot of longevity, but you can make very high amounts of interest, like 12% of whatever you've staked in a day or more, pending the farm. And so moving around, it's work, but it's absolutely feasible and absolutely worth it. That said, being in DeFi also gives you access to the new up and comers that, maybe you said that you personally only invest in like these more established dApps,
Mm-hmm.
but there are legitimate projects that do come around and are trying to become, a new tier one or blue chip project. And if you enter into them earlier, so for me, that might be a project like ApeSwap or JetSwap or, these sorts of, or like Auto Farm. You get to see them enter the stage earlier than most people who are just general crypto holders, and you get to take advantage of just being an early comer into their dApp. So once you're around DeFi long enough, you do start to see patterns and you start being able to pick out different tiers of projects and figure out different strategies for each of them.
Yeah, because don't a lot of platforms sort of launch and then they launch with really high interest rates. Let's just like assuming the platform's legit, right?
Mhm.
They launch with really high interest rates to get people to use their farm, and so if you can establish whether the farm is legit early on, then you can actually get that high interest rate. And
Yes.
but if you, I guess the idea though is if you wait until the farm has been established for 6 months or something, then those interest rates will probably come down by that time.
Yep. So again, it's just going to be this risk reward metric that's going on. So the more risk, the newer something is, the less established something is. Obviously, it's going to have far more risk posed, but it also offers, if it doesn't scam you, a lot of potential reward. So that's, where my project comes in. We're trying to help you parse out, because I'm already parsing out for like my own interests, and my team is already parsing out for their own interests, what is and is not going to probably scam you. And it just provides you a lot of tools and education through our main site, which is RugDoc.io, and our Wikipedia site, or which are our wiki site, which is wiki.rugdoc.io. We try and provide you with free, easily accessible tools so you can learn how to check your own contracts, so you can learn how to develop your own strategy and conduct due diligence and look at tokenomics, understand dev teams, what a roadmap should consist of. We just try and guide you guys and help in community due diligence and just provide like a check and a sounding board on creating better methods for yield farming instead of just praying and hoping you didn't just jump into something that's going to eat all your money.
Yeah, and this is probably one of the biggest, uh, things that crypto has to deal with right now with decentralized finance. Is it sounds great, it sounds really great. But then people, as you said, when you first entered, you said you and your husband got rugged, right, fairly early on, and then that encouraged you to actually create something that tries to help you not have that happen again.
Yep.
And then of course if you're doing it for yourself, and then you decided to make it available for other people as well. I mean, I think that's great because the community, the crypto community definitely needs more resources, I think, to figure out which ones are scams, like blatant scams, and then which ones are not, and to not have those reviews be paid for by someone. So I think that is what is one of the key things that I think you're sort of filling in the gap right now.
Yep. Yeah. I mean, it's been a really fun, interesting journey. And we've been reviewing, I think like we're well over 1,000 farms at this point, which is pretty cool. Um,
What percentage, like out of the, say, like if you do 1,000 farms, like,
mhm.
can you give me a rough percentage as to which ones like are legit, which ones are not legit, or Yeah, I don't know. Are there any interesting metrics there
Sure.
that you have off the top of your head, or would you just be, yeah, not really knowing?
It changes every week and with conditions of the market. So you see more scams pop up in a bear market like right now because people are more desperate and, they're just trying to squeeze out what they can. So 3 months ago, I would have said, well, actually, let's take it back to the very beginning. When I first started this project, and we're not even that old, we're only like 4 months old.
So you started in 2021.
Yeah, I started in March, like late March.
Oh, wow. Okay,
Almost
so
April.
it's
Yeah.
really, really, really new.
Yeah, we're a brand new project. Because I didn't even learn about decentralized finance until like January. And then I took like a month to, learn Solidity, learn the ropes, and actually figure out how this crazy ass system works and what sort of strategies I can apply to it. Because I was moving from, a more traditional crypto background to just this absolute Wild West, which has a steep learning curve and had a much steeper learning curve before, there was again, shilling my project completely here, but like before there was like a centralized information hub on safety. Didn't exist. I just like, it took a while to like ramp up and actually like figure out how to not just get completely wrecked here. So back when I first started, I would say that, maybe 20%, like 15 to 20% of farms were just like rugs, and they were hard rugs, like the complete steal all your funds sort of rugs. Lots of migrator codes, lots of transfers, lots of just very obvious, very basic steal your funds sort of things, because nobody was checking contracts back then. Maybe some people who were like had more funds available to them would like hire their own personal Solidity dev to check things if they were like a whale and they had a lot of money that they were concerned about. But the average Joe, they were not. It was just like kind of contracts were not being checked. It was not something that happened. I'd say once my project became pretty established by May, direct rugs dropped substantially to maybe like 5% of farms, possibly even a little less. And you were really not seeing them because the market was hot. It was a bull market. Everything was going great. And, it was really hard to just hard rug people because my community was out churning like reviews, checking codes. People knew to look for migrators and transfers and these other very straightforward rugs. But now that we've entered this more prolonged bear market, and we're really in like month 3, I'd say, of this bear market, month 2.
Yeah. It started really in like May.
Yeah, exactly. I'd say that we've really seen an increase again in scam farms, but they're not hard rug farms typically. They do exist, and we put alerts out for them a couple times a week. So maybe we come across 3 to 5 hard rugs a week. But, and again, we're scanning hundreds and hundreds of farms a week at this point. But I'd say a lot of the ecosystem, the scamming ecosystem, has shifted to these softer elements. Like they'll just start a pre-sale and then just never open a farm and just disappear with the pre-sale.
So how do you, like, if someone does do you think it's generally wise to avoid pre-sales because of that? Or do you feel like some are, okay. So I mean, I've always basically been avoiding pre-sale. Like the whole ICO thing, like I understand that, some ICOs have made, they have done really, really well, right? Some people have made a lot of money on ICOs. The problem is that, you give everyone your money up front and they have all your money, and then it's like, okay, well, they have the money already, and then they could go work, or they could just not do anything because they already have all the money, right?
Yep.
I really like the idea of letting the market decide the valuation of things, not the not the CEO or the lead developer. Because if the lead developer decides even like say like not even in DeFi, even if it's just like their ICO, if the lead developer just decides what the price should be, of course they're going to try to they're probably going to see it as being more valuable than the market would probably see it as being too.
Oh, 100%. And I mean, I think that's part of the reason why we get some like pretty funky economics in just crypto in general, not even in DeFi, because you basically have teams who are trying to establish a value for, whatever thing they've created. And it's not real because everything in finance is dictated on what is the value in like that people are willing to put into it, right? money in general, at least my philosophy, does not have any particular intrinsic value past what people buy into it, right? Doesn't matter if it's fiat or crypto. So when you have these pre-sales, like one, just from an economic perspective, they rarely make sense because, like you said, there's these like weird evaluations, and who knows what it's even worth. This isn't a company. You can't put a tangible asset evaluation into these. And then two, it's just so easy to just like scam. There's no motivation, like you said. Once they have money up front, why would they stick around?
Yeah.
You know? Yeah. And so you see that all the time in DeFi and even in just like general ICOs. Like, you know, a project has all this hype and, you know, they make a really nice website and they like get everybody involved, and then, you know, they cash in, cash out, and the project essentially dies.
I think a lot of people underestimate how easy it is to create a nice looking WordPress site, to launch an ERC20 token, and then just to pay a few people to promote it. Like it's sort of like a formula that a lot of people just do over and over. And my guess is a lot of the scams out there are probably done by the same people just over and over and over again.
Yep, you're 100% correct on that. It's literally teams, and honestly, it's often organized crime in certain countries who just go and they just like serial make these tokens and these like complete shit farms that just sit there, scam, they make their money, and then they move on to the next, and then they just rinse and repeat this. Or if they're a more sophisticated group, it's a group of hackers that they've figured out some particularly more complex exploit. And these are the sorts of things that, you know, they may only pull off instead of serial shit farming. You know, they'll wait weeks or months until a large protocol is established and has some sort of functionality they know how to exploit, and then they'll exploit it. And, you know, it's pretty nuts to see both of these things go down.
Yeah, and as you know, as being in the crypto space for a long time, I want people to be smart with their money. You know, I hate it because so many people fall for scams all the time. So I guess, I mean, now would be a good time to say like a tangible thing that people can do that are watching this video to get more insight is to go. I mean, I'll link the stuff, and we'll keep talking, but I'll link the stuff down below. But yeah, go check out the RugDoc and go check out their social channels, because what's great, you know, and in my time looking at it, and I reached out and said, hey, do you want to come on? The great thing is, you know, it's free, right? I mean, it's like you can get some insight into a farm for free, and I think that's really great. So. Here, I see the slide that you have up. So the process for evaluating the farm. So let's say right after this call, right after this video call, I decide I want to go into the most degenerative part of yield farming. I start scouring everything, and I find some nebulous name or nefariously named website about, and they're offering me, you know, ridiculous returns, right? What do I do?
Okay, so send us the URL, the smart contract address on the Chain Explorer, and just, you know, what the start time roughly is, what chain it is, and then just like hashtag request. This is then going to get logged into a database that gets scooped by a bot that I have trolling my chat. And then it gets sent to a special quiet like scanner channel. So we can basically like pick up these requests and my team can start to review them. Then from there, we're going to check for malicious codes like depositor transfers, or, you know, common bugs that we know exist, like a syrup bug, like what happened to Pancake Swap originally, migrator functions. We'll look at custom features in the code and what they mean, tokenomics, and then we'll come up with a risk assessment on it. We'll give you the bullet points on what is in that code, how risky we think it is, and then hopefully that gives you some insight as to, you know, what you want to do to proceed with it. If you just want to like completely avoid it, if you want to watch it for a little while, or if you want to like, you know, put some money in and maybe you want to do a native play, or maybe you want to do a non-native play. And there's different things that you can start to pick out once you start to understand what possible risks are in these projects, both hard encoded and just like in these more tokenomics or team, or just even the general type of a project that it is. You start to pick out patterns.
Do you actually make the effort to look at literally every single platform, or are there so many that you couldn't possibly cover them all? I don't know how many there are, so I don't know.
Yep, we've done well over 1,000 farms at this point that we've reviewed. I'd say we get the bulk of DeFi farms coming through us at this point. There's not many that happen that we have not reviewed because we have a very engaged, very interested and active community. And like I said, we're a peer community crowdsourced project. So this is, how engaged your user base is how successful my project is. My users are like, the second they find some new farm and they're like trolling GitHub repositories and like, looking at Explorer for like new tokens that launch, we get a notification.
I guess the network effect, that once you have a large network, there's not going to be really a yield farm that goes unnoticed.
Basically, yes, at this point. So I'd say we get the bulk of traffic and we clear everything usually within 72 hours. Okay. So we literally say like between 36 and 72 hours from the time of your request, it's going to be on our website. So sometimes it happens much faster. So maybe, where you just caught someone on a good day or one of our scanners is personally interested in that farm for themselves. So, they'll just like scan that thing in like the first 10 minutes that it gets requested. But we go through everything and our backlog is a constant work in progress, but we clear it every day.
Okay. Yeah, I'm looking at the code you have. It looks like are you just running a diff against like pieces of code okay. So could you maybe walk us through what you're doing here?
Yeah, absolutely. So the way that we check our codes quickly and in bulk in the way we teach you guys to, and this is something that fails for very novel protocols, is by just running a simple DiffChecker or some other text comparison site. So essentially, you're just going to find the code that your farm is based off of, and almost everything in this ecosystem is based off Uniswap. So you start with like a Uniswap-based code or, some very simple fork of a Uniswap code, and then you put your new farm against it, and you run it through a text comparison site, and then from there, you just look for the differences. What are the differences? What's been added? What's been removed? And then once we know what's been added or removed, we can basically figure out what that change means for the functionality of everything, and we can create risk assessments. We always tell our people to do their own research, and we really, really, really mean it. So we're trying to provide as many free resources to you guys to educate yourself through our wiki or through our YouTube or through, any of our just community efforts. So you're not just holding us to our word. You can actually check this yourself. And the average user can even just run a simple DiffChecker. And even if you don't understand code, we give you guys a comprehensive exploits and rugs library that we maintain. And you can just start literally control Fing for things like migrator or, fee transfer. And, even the average user who doesn't understand any programming can make basic assessments on what's going to change in their codes.
So you can basically you can look for changes between one code base and another, and then fairly quickly see, okay, are there some red flags that we know are very likely to be rugs or not, just blatantly there that the average say like the average retail person wouldn't even know to look for.
Oh yeah, I mean the average retail person doesn't even understand like how DeFi existing more or less. They're just trading their ETH based on hope and hype.
Yeah.
Right. Yeah. And the whole reason that things like ETH are traded the way they do, fundamentally past hope and hype, is based off their use cases, and often their use cases are like decentralized lending at this point in time, that will change overall. But your actual fundamental value of a lot of these big crypto players are in the protocols that can be developed off of the chains. So retail doesn't even understand what DeFi or what the use cases for the coins they're trading are. But if they did take a little bit of time to research, they could check their own codes and check their own contracts themselves if they jump into using protocols on chain.
I feel like honestly, it's like the more I feel like I just have so many questions. You know, like one question is like, what sort of like how are most of the yield farms like on one network, or are they pretty spread out among a lot of the different chains, or how is that looking right now?
Oh yeah, no. So it used to be very Binance central, like because Binance really got their chain up and working with low fees and low costs faster. So obviously ETH has been around for years.
Right.
You really can't do, or until very recently, you've not been able to make particularly good protocols due to time and cost on the BTC network. So pretty much nothing existed over there. There were obviously a lot of things built on ETH. But ETH is still fairly slow and pretty expensive. So every transaction you make takes a while and costs you a reasonable amount of money that you then need to like figure out into your own overhead and profit sort of calculations. So Binance was really the first network to take this and reduce their fees and reduce their costs. So a lot of these, not even just yield farms. Obviously, yield farms are a dime a dozen, and there's so many of them. But just like general things were being built on ETH or on Binance aggressively after ETH. But then we've really been seeing in the last couple months the rise of all of these alternative side chains that are competing with that. So Binance, I don't really think has a capital, like they don't own the majority of the market at this point. It's pretty spread out between Polygon Matic and between Coup and between Avalanche, and you know it doesn't quite exist yet, but like people are all hyped for like Cardano. So you're really starting
nebulous smart contracts, right?
Yeah, exactly. So you're really starting to see a lot of proliferation on all sorts of chains. And since everything is based off Uniswap, including these chains ultimately, like everything is based on the same fundamentals, your farms are going to be the same too, more or less. So one smart contract code written in Solidity for Binance works on Cardano, it works on ETH, it works on Avalanche, which is how we're able at RugDoc to look at all the chains and scan farms and protocols for all chains because It's all the same stuff.
Yeah, I mean, with Cardano specifically, I am excited to see what gets developed there because I've been following that project forever.
Yeah.
But I would say, you know, with regards to Ethereum, you know, Ethereum, it's funny because we talk about things being decentralized versus centralized, and I know a lot of people give Ethereum a hard time, right? Because fees are high, and it makes a lot of yield farming untenable to some degree. If the cost to just like, you know, move your Ethereum is going to sort of completely negate what you might make for, you know, a certain period of time, then it can lead people to not want to do it. But I would say that with Ethereum, you know, they're doing so. Maybe I should phrase it like this: like a lot of these projects, like Binance, like the Binance Smart Chain and whatnot, like they're solving these issues, you know, in ways that Ethereum would not want to solve them, you know, because Ethereum doesn't want to sacrifice that level of decentralization. But what's interesting is it's interesting to hear the market talk and say, well, you know, some people might not care about that, right? Some people might be fine with, you know, some levels of things being not absolutely as decentralized as possible if it means that they can actually, you know, do these yield farms with much lower fees.
Yeah, pretty much. Or, you know, not even just necessarily yield farms, but, you know, things that are going to evolve to be more comprehensive ecosystems. If you have high transaction fees, it just muddies everything up. Right. Or if you have just like slower. But you're right, that comes at the sacrifice of generally centralization. So when you have Binance, when you have Polygon, when you have Avalanche, they have clear, you know, speed and cost superiorities to ETH. But, you know, there is higher degrees of centralization. A lot of these projects, you know, or a lot of these chains, they don't interfere with things that are being developed on them. But, you know, they are certainly more centralized protocols.
Right. And I would say Ethereum is the most decentralized out of, I mean, and it's not
Yes.
even, I don't even think it's close, right? It's like Ethereum is the most. I would probably say Cardano is probably after Ethereum. But then as you go down the scale, I mean, there are some that are extremely centralized. And I think Binance sort of saw that. And, they made a bet. They basically said, well, we bet the market would rather just have low fees than care about how decentralized it is. And I mean,
Yep.
they were right. I mean, so many people were just migrating over there and yield farming and whatnot.
Sure. I mean, like, what's the biggest commentary and criticism on crypto? It's the fact that it's unregulated, which is also the beauty in it, and it lets you do certain things that you can't do in traditional finance. But yeah, the biggest criticism is going to come from the lack of regulatory. So you see a lot of people who are in crypto or who are new to crypto who, want to get more involved in this, and they want to see some degree of increased centralization if it comes with a little bit more regulatory and if it comes with a little more stability. So you
Right.
see this, like, the market demand is changing, how we're implementing cryptocurrency now.
Yeah, I mean it's true because I mean a lot of people say that decentralization is sort of the point, but there's a lot of people out there that don't actually want the responsibility of controlling everything. Like they would prefer for some other party to be the one to control things, I guess.
Yep.
But okay, so I guess what are the red flags? Like, here you have your slide. So what are the main red flags? And what I would say too, a follow up question after you sort of explain these flags here is what, like, at what point, are you already have you already reached the point where you maybe start, once you've identified what are scam, like which ones are obvious scams. I almost wonder if you can start mining the data even more to figure out, like, even earlier, like, some red flags that are even more telltale signs of, like, before you've even looked at the code, almost like, okay, well, what is the allocation that the dev team has? Like, is it more or less likely to be a scam based on what that allocation is, or things like that, I guess.
Yeah, 100%. So red flags come both in hard encoded elements and, again, these more like nebulous elements. We tend to say over at RugDoc that, like, the code is clean because we believe that, like, your biggest risks come from things that are hard encoded, because those are just your catastrophic, like, loss of funds migration sort of situations. But even without getting into the code and looking at things like migrators, proxies, you can look at things like socials and community activity. How is the dev? Do they answer questions, or do they just, like, ban people? Is the chat active? Are users, like, fairly well respected and comfortable? Is the community fairly large and engaged? Is it running well overall? Is the website functional? Have they done audits? Have they done user-centered audits specifically? What does their socials and community activity look like overall? Does the dev have a history? What other projects have they done, and how have they performed? Or even the team, not just the dev. When you see a lot of these projects, it's a fairly small community. So when you're looking at who is moderating the chat or who is doing your web dev work, what has that team done before? Have they worked together before, or have they just, like, worked on pretty solid projects? Things like a sudden stealth launch are giant red flags because, if something just appears out of thin air without any notice or without any audits or without anything, generally more reliable projects, they take time to develop. And so a responsible team will kind of let people know as, like, oh, we're getting our website up and running. Oh, we're starting to do the liquidity into the pool on Monday. Sudden stealth launches are almost always scams. They're just, like, trying to come in and basically appear and leave with money before my team has a chance to review them. So if something just, like, comes out of the ether, probably don't want to invest in it just yet.
No pun intended, right?
Yeah, exactly.
No, I mean,
So yeah,
I
and
think
then
that's a good point. So, like, the more, like the quicker it just happens to pop up out of nowhere, the more likely it is that they probably just copied some code, inserted some,
Hmm.
some migrate function or something that, and then they're just trying to quickly get out there, hoping that there's a few people that will sort of just see the high interest rates and FOMO in, so to speak. And then they,
Yep.
before they even have a chance to check their interest a couple days later, everything's gone.
Oh, totally. Yeah. Um, and even like just basically looking for timing, just looking at team histories and making sure contracts are verified. You can just go to Explorer, and if you can read the contract, even if you don't understand code, even if you don't look at anything, so long as you can see a code on the contract Explorer for their master chef or for their token contract, you're already a step ahead on the scams. An unverified contract is a giant red flag because anything can be hidden into it and you just will never see it. You don't know what's in there. It's a
Right.
black box.
Okay.
So yeah, I guess I can talk a little bit about the other thing that my site does is once we've established these risk assessments of the code and the teams and the tokenomics, we do allow our low, sum, or medium risk projects, once they've been reviewed, to advertise with us.
Right.
And that's something that we get asked about all the time, which is why there's a slide on it. It's not particularly relevant for a lot of your user base, I wouldn't assume. But
Well, no,
for
I mean,
us, it is
I think,
important.
yeah, I mean, I think you're right. I mean, maybe the user base, but I mean, like, everyone has. I mean, in order to do what you're doing, right? You're running a business. If you're not charging the end user, you got to be, you have to be doing something. So that's an important thing, though. Like, if people go to your site and they see something advertised, can you
Yep.
clarify what happens if a project that is high risk says, "Hey, we'll pay you money to promote us." Like, but
Yeah.
you've sort of audited them, and there's red flags.
Yep. Yeah. We can't let those projects advertise. We are trying to ultimately, at the end of the day, be a community safety resource. And both you and I fully agree that like one of the biggest problems in crypto has to do with being able to pay for influence, just pay for play essentially. And that
Right.
leads to all sorts of like unfortunate scams and stupid token plays and just like dumb situations because people are just taking money to like shill something that's like an utter failure at the end of the day.
Right.
I think that's like incredibly immoral, and it's the reason my project even exists. But you're right. Like I have 23 or 24 employees now at this point because my operation is very, very large. We're running like all these scans and education resources and content at this point. So we moved into advertising, but it is always conditional. That can end at any time if we even start to get suspicious of a project. Um, we do consult with farms. So if we have already reviewed your code and the farm has to be reviewed first, like we can't have a farm approach us before we've reviewed them for advertising, then it's just, that's when we start to muddy the waters.
Sure.
We will work with them. We will provide a consultation if they need it. So if we've already reviewed their code and we say, you're using like a proxy contract, man, like we can't bless this thing. This is not, there's a lot of risk the user takes on. We will work with them to improve the user safety of their project in some sort of a manner. And then we can adjust their risk rating because these aren't a one and done situation. We are constantly updating projects based off of new information coming in. So we can update things according to changes that the team makes and, see if they qualify for advertising then. It's also an incentive for farms to act better, right? Farms want access to my user base. They just do because they're engaged yield farmers. They're usually educated yield farmers too. These are people who have been around for a little while, kind of know the game, and they're really good community participants.
Right. I mean,
So
that's the audience they want, of course. Yeah. Because I mean,
totally.
like I mean, anyone following your channels and whatnot, they're it's like 100% yield farmers. The people that are following, say, my channel, maybe it's like 25% people are yield farming. So it's like obviously they're gonna get more interest from a community focused specifically, yeah, like specifically on yield farming.
Yeah, so we've kind of been able to create almost like a mini launchpad situation just by existing. Because if these farms and these projects want access to my user base, they need to demonstrate their commitment to user safety. They need to, jump through the standards that my team has and, actually do a little bit of work, and then we can advertise with them and go from there. So yeah. It's really cool. And now that we do things like if a project has a KYC or if it has certain types of audits, these are ways that you can screen projects on my site. So we're further encouraging projects to do further, to go above and beyond just meet my safety standards, but to also KYC or to also get a proper audit, or to just, participate, because then, a user can literally go to my filters and only look for projects that have have exceptional safety standards attached to them.
Okay. Yeah. I mean, it's definitely an interesting way to I mean, it's tricky navigating the space for sure. I mean,
Oh, totally. It's a very weird space.
Yeah. I mean, I think too, like, having people with the right background. I mean, I know you said you have a PhD in engineering, so it's like, I know that, you had a rigorous background, to be fully capable of looking at some code and whatnot. I think that's important too, because I mean, my community knows, like, I don't invite many people onto my channel, right? I mean, like, that's why there's probably some complaints in the comments, even on this video, as to why my audio is so low. It's because I don't do interviews that much. Like, I don't bring people on. And when I do bring people on, it's never been a paid promotion, right? It's never been a paid promotion. It's basically just when I think they provide some value, right? They provide value to the space, and I want my community to see the value that they're providing, right? And that's ultimately what I think the most important thing is, because, like, I don't want my words to be paid for, and I would prefer to just bring people on that I think are providing value. I see this current slide you have. I think it might be an interesting story. So what are the most sophisticated?
Sure.
What are the most sophisticated?
Yeah, this one was a recent one, so it was kind of interesting. Usually you see similar patterns in the rugs because, you're just looking for different types of migrators or transfers in, different types of contracts that we can eventually parse through. This one was a DoPL fork, and DoPL's a pretty established large protocol at this point. It's based off of Saddle. So this thing called Stable Magnet showed up, and because DoPL and Saddle are well-known, solid projects, it got a lot of attention, and it rapidly jumped up to like $20-something million in TVL. And all the code looked clean. It had verified contracts. They were great. They were fine. There was nothing wrong with them. It was a complex protocol, so it was one that we claimed was ineligible for review until it got an audit. But, all signs pointed to this one would be okay. And then it rugged, and it stole like millions and millions of dollars. And it was because there was an unverified library contract, which from a coding perspective is absolutely bonkers, because library contracts are just your definitions for a code, essentially. It's telling you like how to do math or what a function even means. There's these very basic parts of the code and very basic parts of writing any any contract is just establishing your library. And yeah, they just had an unverified library, snuck a code in there, and it just drained all the tokens. Even if you just approved.
Yeah, I can see why that would be overlooked, because you just sort of a lot of people might just assume that the libraries they're just what they are, right? They're libraries that you might call from or whatever. You don't expect them to be the part of the code but I guess that's a learning opportunity for everyone.
Oh, totally. It was a brilliant learning opportunity for us and for our community. And the fact that it was an unverified, which means that when you pull it up on an Explorer, it doesn't show anything. So you couldn't even find this library contract. It took us and another large DeFi team out there a couple hours to even figure out what the hell happened, because we couldn't even find this contract initially. And we had to start going through different calls and functions to find this unverified library and then be like, this could be the suspect. Even if you just approve Stable Magnet, it could drain tokens directly from your wallet, even if you were not staked in the farm or anything. It was an absolutely wild one.
I guess one
So yeah,
thing.
then we were able to. Yep.
Sorry, I was just gonna say. I guess one thing is even for projects that seem like they're that they're completely clean and whatnot, everyone should always exercise the utmost risk, right? You don't want to take all of your crypto and put it into a single DeFi platform, because there's risks involved in everything. And that's one of the things. I mean, I think spreading your risk around is probably the right way to do it if you want to venture into the space. I don't know if you have any more insight into that.
No, 100%. This actually lines up brilliantly with my next slide, which is like, what advice can we give to new farmers in the space? And number one, split your bags. Split your bags.
Oh, yeah.
Assume everything is a risk. Crypto in general is a risk. DeFi is even more of a risk. So, when people say like, oh, only invest what you can afford to lose, that is so much more relevant in this space. Only invest what you can afford to lose. And then once you've figured out that total investment amount, split it up. So, maybe a 5% loss is not that dramatic. So then you're only going to invest 5% of your investment in specific farms. Like, just go into something, assuming a farm will fail, and develop a risk strategy around the premise that a farm is going to fail. And once you start thinking about that, you'll start to develop better practices of yourself. Learn how impermanent loss works. When you're making LP pairs, they don't just stay that perfect balanced 50-50 value that you created in the initial. They're going to change if one of the LP pairs starts to dramatically go up or go down in price. You start to get things like impermanent loss that you have to factor. Don't just trust any dev. Start with like really tier 1 basic projects like PancakeSwap or ApeSwap and just watch what's going on with your split bag until you're comfortable, and always play with very small amounts of money until you understand what's going on, because the learning curve, even with the resources we're providing, is still so steep in DeFi. And that said, you really do need to like educate yourself on the basics to be a reasonable investor and to be able to develop a risk strategy. I've started to create this wiki site, which has a lot of interesting articles and videos on it. But, just really educating yourself, doing your research, and actually practicing a good risk strategy is so, so key in entering any sort of crypto, and especially DeFi. Because what happens is people, they just go in with more money than they can afford to lose and won't do their research. And then you lose your money because you don't understand how these yield farms work, or you don't understand how a protocol works, or what fees may be attached to it. You actually have to read documents if you want to be a good investor. You have to like read white pages. You also see people.
I think that is that. I mean, it's one of those things too where it's. I don't know. Like I agree. Yeah, people should definitely like read the white papers and whatnot. But we also have to admit too that like a lot of not everyone has like the right background to even be able to. And I guess with DeFi, it's even more pertinent. Like being able to review smart contracts and whatnot. I mean that's why I think the service of reviewing these things can be so helpful for people, because a lot of people don't even know what they would be looking for. They might see
100%.
Yeah, they might look at the code and they might see a function and they say, all right, it looks fine, but a little bit more experience, they might be blatantly aware of it. I would also say too, if people are going into DeFi, it might be like maybe take a. I don't want to provide any specific advice, but yeah, as we said before, don't invest more than you can afford to lose, and go in with the mindset sort of that, especially when you're just learning. I would say if you're going to start just learning it, start with tiny amounts and see how it works, and probably start with the more seasoned platforms, and then once you kind of get comfortable with it, branch out some maybe.
Yeah, exactly. It's really important to just be able to understand your limitations, because you're right, not everybody has the background. In an ideal world, everybody would learn enough of the background to be a solid, successful, educated investor in whatever space they're investing in. But if you can't do that because you don't have the time or the capabilities, or you just, I don't know, just don't want to, figure out what resources are going to do that work for you. And it may not just be from one place. You might have to like find a couple different websites or a couple different resources or trusted people to actually get that background in.
Yeah, agreed.
Yep. Yeah, we kind of already talked about this one earlier, so we can mostly skip this slide because you're just seeing this like emergence of like new side trends. It's not just Binance and it's not just Matic and it's not just Ethereum anymore. You're seeing just like new trends are new chains are popping up, new protocols are popping up. There's a couple of changes that we have seen in terms like in times of bear markets where you just start to see different types of farms popping up that have higher fees associated with them, which again is why you kind of want to read white papers or at least understand how a project works. Because now that devs are a little more desperate, you start to see things like transfer taxes or, slightly higher deposit fees, which are not necessarily the end of the world, but they're things that you need to think about when you're yield farming in general. And again, that goes back to find a trusted source of information.
Yeah, I mean, it makes sense. I mean, I know fees can really eat into, especially on Ethereum, they can really eat into what you might be making. I think one interesting thing will be to watch which of these chains survive, because at the end of the day, there's going to be tons of competition, but it seems like, the best, a few, like anything, right? Like anything, and with competition and whatnot, there will be a few that probably rise above the others.
Yep, absolutely. And I think I mentioned earlier, like part of the beauty for me of DeFi is being able to just identify these new chains and these new protocols really, really early on. It gives me the opportunity to be an early investor in things that actually have a shot at taking off.
Right.
So it's something I feel a lot of retail misses out on because they're just buying things kind of randomly based off of something they heard on Reddit, and they don't actually understand if it's going to have longevity or not.
What's funny is a lot of the stuff on Reddit too, like, like they'll have these bots that will upvote the posts of a lot of the scams. So it looks like people are like the project, but in reality, it's and even that is because now now some different subreddits like you get sort of paid in some crypto, right, for upvotes and whatnot. So then there's like farming votes and whatnot. So it's a whole, don't trust anything basically that you see. Just because it's showed on Reddit and has a lot of upvotes doesn't mean it means anything.
So true. It's so true. Yeah, there's so many bots, like even in these like channels on Discord and Telegram, you can bot a channel up so it looks like you have interest and activity when you really have nothing. It's so easy to do.
I've seen it I've seen a lot of that on Telegram because
it's those bots are easy.
Yeah, I mean as someone who I run a fairly large Telegram channel. It's like 45,000 people or something. I don't remember exactly, but I've seen I've been contacted by people that say, hey, we can get we can have a lot of bots added to your group, and I'm like, no, I'd rather just have quality subscribers. I don't need a lot of people, and that's another reason this channel is just I'd rather not do all the crazy stuff and just low key and have quality things over quantity.
Oh, 100%. I'm all about organic growth and actual participating, building community, because no amount of bots or, fake posts is going to actually give you the benefits of a true engaged community who trusts you and works with you.
Is Telegram like the main platform that people sort of communicate with this, or would you say it's a different one?
Unfortunately, it is. I personally hate Telegram. I hate how it's organized, but you know what? That's where DeFi is located, so that's where we are.
The crypto community is really big on Telegram. I think the gaming community really likes Discord, I believe.
Yes. I get requests often to go and make a Discord, and I just don't have the time to manage all these different chats. Um, but yeah, so we're focused on Reddit. For some reason, crypto loves it.
Right. All right. Well, I mean, I really appreciate you coming on. I feel like you've provided a lot of insight into the DeFi space, the yield farming and whatnot. And yeah, I mean, if you're watching the show, go check out their social channels. I've already been looking at them. I think they provide a great service, like insight into how you can navigate the DeFi space. So go check them out. Like, I guess you recently launched a YouTube channel. Is that right too?
Yep, yeah, we literally launched the YouTube channel in like the last, I don't know, week and a half. And we're really just aiming to try and provide both solid educational content that complements our wiki. And then we're also adding in, because we have a new degen farm chat, we're trying to like also throw in a couple, watch what one of our admins farms or like what they're doing. So we're trying to like provide a weird little funky mix of both, pure educational content and
Okay.
degen farming play. So we'll see how it goes. It's experimental still.
All right. Well, everyone, make sure you subscribe to this channel. Go check out their social channels. We'll have everything linked in the description below for everyone, so they can easily go find it. But again, thanks for coming on. Thanks for coming on to the show. Hopefully, we'll have you again in the future for another discussion about DeFi.
I would love to. So yeah, glad to have had this chat. It was great.
All right. Bye.
See ya.